All right. What is going on, everyone? Welcome back to the channel. My name is Gerardo, creator of LookIntoHex.com, your premier experience for your quantitative and statistical analysis and charts on Hex. Let's get into this video. We're going to be talking about Hex Hold the Line. That line that we're talking about is our regression rainbow. We're going to talk about the implications of breaking beneath it, kind of the margin of error within the statistical models themselves, like this one, and not only that, different data sources which you can pull to make such a rainbow like this, an exponential regression rainbow, such as this hit BTC data or the Uniswap data or the nomics data. Just kind of touch on the margins because some of you might say, well, we already broke beneath the regression rainbow. And sure, we'll get into it. We'll get into it into more detail. But first of all, welcome in. I want to thank everyone for 10,000 subscribers. I had to get that out of the way because I got emotional, right? After we hit 10,000 subs. It is a huge milestone. It's 10,000 of you. So I want to congratulate you guys, the community, for rallying together behind an idea, right? I'm just here making content, but 10,000 of you, when you're at a concert and you look at the crowd, 10,000 people, that's you guys. And it's absolutely unreal. And I truly want to thank you. Not only that, the support on Twitter recently, where I tweet out personal accomplishments, has been amazing too. So I want to thank you all here in this video right now, because I can't reply to all 10,000 of you all the time in YouTube comments, Telegram, Twitter, Discord, right? I'll leave a link to our new Discord down there. But yeah, a lot of cool things coming, man. I guess I might as well touch on this too. LookIntoHex V2 is coming out most likely in February, right? I hired a developer to build the entire custom web application from scratch, meaning LookIntoHex.com will redirect to a custom web app versus what I have now, which is like Google Sheets, HTML to Wix, very sloppy architecture, and also have to manually input data into the Google Sheets. Very, very sloppy, very inefficient. And so we're going to have automatic updates. Automatic real-time updates. Some values can update every day. Others can even update more frequently, like every few minutes. For example, those of you with access to the liquidity dashboard, that'll be a huge improvement. So overall, a bunch of cool stuff. And thank you all for the support. And we're going to talk about Hex's short-term price to start. Let me pull up some chart I had here. And we're sitting at what? 13.7 cents. Nice 137. And I mean, we've been here before. This is nothing new. We returned to prices not seen since August. So 3 months ago, this has been our longest dip to date. And you can see that illustrated here by this long-term Uniswap V1 chart, which shows the entire price history of Hex starting on December 16th when it opened on Uniswap. And we've had an 81% dip back here and an 86% dip right here. So our post-launch and our post-big payday were our biggest dips to date, clocking in at 81% and 86% respectively. And our current dip is closing in on about 78%. So nothing new, right? I just want to point that out. It's a big deal that this is nothing new. Now, hold the line. What does that mean? Well, you can draw this trend line a variety of ways, and obviously the regression rainbow draws it a certain way. But remember, these are statistical models at the end of the day, and they do have margin for error. For example, you can say, or you can choose to include this touch point or not, right? You could say, all right, we'll use this as data, this is data. And again, ever since the beginning of the regression rainbow, ever since I created it, I spoke about there's a lot of discretion there. There's discretion in what the analyst considers to be local minima, or some people like to call it non-bubble data, right? I know certain people use that term, but these sort of clusters of local minima, again, there's discretion into which data points you snag to actually make this model. Even then, there's margin for error, statistically speaking, right? You have some standard deviation going on. So this, instead of actually being a line, should really realistically be kind of a band, right? Give it a little bit of room, margin for error. But as you can see, you still have a case for holding this long-term trend line. That's why when you see something like this break, well, you say, look, this red line is a line of best fit. And it can be fit a multitude of ways. You can choose the data at the discretion of the analyst. So I don't want to repeat myself too much, but the point is, we still have a case for holding the line, so to speak, holding this exponential trend. Because remember, this is a log scale. So a line on a log scale is an exponential curve on a linear scale. Those of you guys who watched the early regression remote videos probably have that cemented into your brain. But there's definitely a lot to touch on here. Let's go into this fractal, death cross, golden cross fractal, right? I really want to talk about this because, first of all, I should say never financial advice in these videos, only for entertainment purposes only. All right. I see this fractal in the charts. What fractal is that? It is, let's go back in time to December 2020. Excuse me. Let's go back in time to 2020, July, right? Or rather, May. We had an all-time high. And then this peak here in July didn't necessarily reach that previous all-time high. Just missed it. You could call this a double top. But for the most part, we would say that this was, some could argue this was actually our longest dip to date, right? 124 days. Whereas currently we're at, about 91 days. So in theory, we could still have about a month to go. And of course, it's slightly different, right? Here we had kind of a double top scenario. This 30-cent top didn't reach this 50-cent top. But again, it's not going to be perfect, but you see some comparisons. Back to what I was getting at. We had our all-time high in May, at about 60% of a penny. And at some point, we broke beneath our 50-day moving average. This is the green curve. We had this sort of 5-wave formation, right? Where A wave goes from above both averages to the 200 AMA. B wave goes up to the 50 MA. C wave breaks beneath the 200 day. D wave gets rejected by the 200 AMA. And then the E wave gives us our final bottom, our actual bottom. And then we have a death cross, ironically enough. But by the time the death cross hit back in September of 2020, we had already had put in our bottom, right? And then it was go time from there. And the reason that's so interesting to me, not only that fractal formation, which we see repeating now, but also what's happening on the RSI. So what do we see happening now? Well, we had our 56-cent all-time high. Uniswap V1 doesn't show 56, it shows like 51. Point is, we had our all-time high above both averages, broke beneath our 50-day, right? With our A wave, similar over here. B wave, what did it do back here? It hit our 50-day MA. This one did the same thing. It hit it. C breaks beneath 200 AMA. C breaks beneath 200 AMA. Get rejected with our D wave from our 200 AMA. And then E wave gives us our final bottom. So this is just a really bullish take, sort of a fractal of what happened back here from our longest ever dip, right? There's a case for that. And so this being our second longest dip, if you consider this one our first, gives it, you have kind of a fair comparison, right? And what's happening with the averages? Well, if we zoom in, we can see that our death cross is imminent. It's imminent within the next day or two, right? And price is beneath both averages, so the death cross will happen, right? I don't think there's any way to avoid it, actually, but that's not the point, right? The point is, back here, once we had our death cross, it signified we'd already had our bottom. Not saying this is exactly the same. I'm just a messenger of data, right? You guys shouldn't be basing your financial decisions based off of a YouTuber. Just being honest with you. You should do your own critical thinking, your own research, your own analysis, etc. But I really like what I see here. If we see something similar play out, well, what would that mean? It would mean we already had our bottom. We're going to have our death cross. And then hopefully it's go time from there if you're a long-term Hex bull like I am. What else can we compare? Well, look at the RSI, right? This sort of, the bottoms here of A, C, and E gave us a nice bullish divergence on the RSI form over the course of a month. Now over here, it's definitely not as clean, but we did have our first clear bullish divergence form over the course of a month from November 8th to December 8th, right? Where we had a higher low in the RSI, but we had a lower low on price, namely 16 cents down to about 11.7 cents. Wow, did we really wick down there? Yeah, we already wicked down to 11.7 cents. Man, we've been dipping for so long. I didn't actually notice we'd actually already hit this previous kind of bottom area. So that's another case, right? You have some nice horizontal support, but I've been told, right, I only ever touch on the bullish case for Hex, and it's fair. I touch on both cases, but it's fair to say I do touch on the bullish cases more. So why not talk a little bit about what could happen? Well, we've seen 86% dips before in Hex. Basically, that's the biggest dip we've ever seen in Hex. That would take us down to the 7 or 8 cent levels, right? Around, let's give you, it would take us down here if we had an 86% dip, but we don't have to do it, but we've done it before. So I just want to point that out because, again, people have said I only point out the best case scenarios. So it's fair to say, let's point out some worst case scenarios. So an 86% dip would bring us down to, like I said, let's get the exact figure for you. That's not what I wanted. Here, snag you a real figure. 86% puts us at 7.3 cents. A 95% dip, which is, we've never seen it ever since Hex had a market on Uniswap, but that would put us at 2.5 cents. Again, I think it's unlikely, but nothing is impossible. So I just want to point out what would happen if we saw, for example, a Hex bear market, like ETH dipping from $1,600 to $80, or I even illustrated here these huge dips we've had in Ether: 86%, 72, 67%, 95%, 75%, 61%. What about Bitcoin? 94%, 87, 84, 72. So I think worst case scenario, crypto dips 95%. But again, you could argue Hex is better designed. So if you believe Hex is designed better than these other cryptos, then you might argue for a maximum of like an 86% dip, which we've seen before in Hex. Again, dynamics are different in the market. This is way less of a violent dip and taken way longer than something like this here. So I guess you could have your argument there for it's not going to do this, but hey, I'm just pointing out the possible scenarios, right? Don't shoot the messenger. So we talked about LookIntoHex V2, the short-term death cross, fractal, what that means. We'll touch a little more on the regression rainbow. Like I pointed out, right? Actually, we already touched on that. The fact that there's margin of error, whether you decide to use hit BTC data, Uniswap data, Nomics data, or even what you choose to be your local minima clusters, that changes things. So there's a case that we're still holding the line. Now, this leads me into here. Let's make some room here. Just to do a little drawing for you. But remember that a line on a logarithmic chart is an exponential curve on a line on a logarithmic chart is an exponential curve on a linear. Am I saying that right? A line on a logarithmic chart is an exponential curve on a linear scale. Okay. Point being, if you look at what an S-curve means, an S-curve, generally speaking, starts exponential, and then it goes linear, and then it goes logarithmic. And we're talking about a linear scale. I don't want to confuse too many of you, right? The point is that the case could be made for having to refit the model at some point. All right, I do want to point that out because do I actually have that for you guys? I wanted to show you. Assuming, right? Let me gather my thoughts here. An S-curve looks something like that, right? First you go exponential, and then you go linear, and then you go logarithmic. You could argue that through 300,000 holders or so is on the left side of this. But you could also argue we've hit this territory, right? Where we're starting to go linear in terms of adoption. I do not think we're on the right side, personally speaking. But if we started doing this, right? Well, what does that look like on a logarithmic scale? Well, an S-curve on a logarithmic scale would do something like, probably more like this, right? And so instead of curving up, it would be a scenario where we start bending over. Again, there is discretion to how an analyst wants to make his models, and there is discretion in the statistics of the models. So could we have seen the regression rainbow break? Sure, but I think it's too early to tell. I'd rather give it a few more weeks and see what price action tells us, right? What story it tells us before we actually start making big assumptions or big claims like that, like the regression rainbow broke. But if it did, hey, we can always remodel to have something more like this that starts bending over and starts capturing the idea, the concept of lengthening cycles and diminishing returns. Right? You can say this dip being longer than usual could already be an indicator of lengthening cycles, but only time will tell. I'll be here along the way to update you with data, but I'm not going to be here to tell you what's going to happen, right? So if you got confused with the whole S curve and exponential and linear, all that, I'm sorry. I do my best sometimes. I probably should have prepared a better explanation of that. But the point is, could this be the point where we're going from exponential to linear growth? Potentially, and that would reflect in the charts something like what I just showed you guys, where the curve starts bending over. So we'll give it until the end of the year. And I think things are fine because nothing here is necessarily unprecedented. Now, let's touch on something kind of cool, right? I'm launching a project. I know I might get a lot of backlash for this, but it's okay. Let me pull it up. Let's see if I have it open. I don't have it open right now. Let me open it. But we're launching an NFT project on OpenSea, and they're called PulsePunks. Now, I'll tell you the whole kind of thesis behind doing this, just so that you guys don't take my head off, right? Now, no one can deny the absolute tear that NFTs have gone on, the millions to billions of dollars in volume that NFTs go through. And you have JPEGs of monkeys, rocks, even blank images going for hundreds of thousands to even millions of dollars sometimes. So the thesis behind PulsePunks is pretty simple. I want to see hexagons thrive, right? Most of these, 19 out of 20 of these PulsePunks, their floor is set to 1 ETH, and that gives the potential for a buyer to potentially flip it 10, 20, 50, 100x profits, but obviously no guarantees that this will actually flip, but the free market decides at that point. A third point in the thesis is that stepping into the NFT space will allow us to show other people and onboard other communities, the NFT community, the ETH community, the mainstream DeFi community, onboard them into stuff that we love, right? Hex, PulseChain, PulseSwap. Not only that, obviously your NFTs will be duplicated onto PulseChain as PRC 721, right? And so not only that, think of the OA, right? Huge bag of ETH, 1 million ETH, and therefore way less incentive to sell Hex or PulseChain or anything for that matter early. So that's kind of the thesis behind PulsePunks. Check it out if you want. You don't have to, obviously. We have a Discord, Telegram, Twitter, Instagram at this point. So go ahead and check it out. I'll leave the link in the description, OpenSea.io/collection/PLS_punks. Again, most of these, the floor is set to 1 ETH. The first punk is set to, that one I set the barrier to entry super high at 13.37 ETH, just because I actually want to keep that one. I don't want anyone to buy it. So I set the barrier to entry or the barrier to purchase high enough to where if someone did buy it, well, I wouldn't be too annoyed, right? Because of the barrier. But again, for the most part, that's kind of my reasoning there. And it's the first one, right? So we have 20. This is the site. Go ahead and check it out if you'd like. Again, tell your friends. And I'll also drop the Discord, Telegram, and all the socials beneath that. We'll be dropping it in our Discord as well. So with that said, I mean, yeah, a lot of cool stuff coming. LookIntoHex V2, onwards to 20K subs. Hopefully Hex is done dipping. Hopefully we don't have to, change our model. Hopefully we don't have to bend over the regression rainbow and have it, be a logarithmic regression rainbow. But at the end of the day, if that happens, hey, that's okay too. Let me show you one last example before we head out. And that is this, right? If we look at our pitchfork, Hex versus ETH versus BTC, then you see that we're still on track. I love this chart so much because this one doesn't have as much kind of discretionary wiggle room as something like, say, drawing a line on a chart, right? Because obviously you can wiggle the line around a little more than you can, say, wiggle something like this model around. And so we're still on track. We're technically still outperforming ETH and BTC 724 days into their launch. So basically 2 years into their launch. Bitcoin was at an 80x, Ethereum was at about 110x, and Hex right now is sitting at 261x from launch. So I love to see this chart, but just to point out that ETH and BTC started, they eventually became logarithmic regression curves, which is essentially them bending over. So that wouldn't be too big of a deal if we saw that in Hex. And again, it would look something like this. So I hope we don't have to refit it, but if we do, we will. And that will obviously be our logarithmic regression rainbow on LookIntoHex. So with that said, I appreciate you watching. Check out, again, all links to everything in the description. Thanks again for all your guys' support. I will be streaming this Sunday with a staker team from somewhere else in the world. So it won't be the usual studio, traveling a little bit. Probably notice there's stuff here. But yeah, appreciate you watching. Subscribe if you haven't already, and I will catch you guys in the next video. Peace.